Well, Tesla's Q2 earning was out and the stock has dropped pretty much 6+% in the last week. Hello everybody and welcome to Synanomics, the money machine. By now you have guessed, I'm going to talk about Tesla, the talk of the town, which has actually got many of these AI stocks tumbling down, including Nvidia, Microsoft, and Meta, and you name it. Most of them are down in the last week. Well, we will analyze the result, Q2 result, and we'll also look at the future and the forecasted outlook of Tesla. You will be surprised to know that Tesla actually has beaten the analyst's expectation from the revenue and EPS perspective, earning per share perspective. Then why is it dropping? I'll come to that later. Guys, Tesla actually reported the Q2 earnings a couple of days back. From the revenue perspective, they had 24.93 billion revenue versus the market expectation of 24.48 billion. And this revenue was 47% higher year over year. From the earning per share perspective, EPS perspective, Tesla actually posted 91 cents EPS versus 82-cent EPS, which the market was expecting. From the auto gross margin perspective, it was slightly down, 18.2% as compared to 18.7% forecasted by the great analysts or the market. So 0.5% decline as compared to the market expectation, and the whole market is unhappy. Well, that's not the only reason. And guys, Tesla has been cutting prices to boost the demand. So it has boosted the demand, and this time they have actually produced and almost delivered 86% vehicles higher than last year. So there was a vehicle production growth of 86% year over year. So yes, they produced in Q2, which they had released the data earlier, 479,700, roughly 480,000 EVs. And they had to cut the price twice. So everybody was knowing it. It was an open secret that it will impact their margin. Then what's the big fuss about it? The good news is that Tesla was able to retain the margin. Guys, its long-term guide was 20%. Now it's 18.2%. If you look at the other parameters, other financial parameters, so from the operating margin perspective, it's 9.8%. If you look at from the net income, GAAP net income was $2.7 billion. Non-GAAP was $3.1 billion. If you look at the operating cash flow, is 3.1 billion operating cash flow. Free cash flow, $1 billion. The good news is that it has actually added 0.7 billion cash quarter over quarter, and it has now sitting on $23.1 billion cash and cash equivalents. From which angle this is looking a bad result, other than just number one, it has missed the analyst's expectation by 500 basis points, was 0.5% in the vehicle gross margin. Well, many of the bears, and when the stock has actually outperformed, then everybody keeps waiting for a news or an excuse to sell it, and that's what is happening. In my personal and humble opinion, guys, this is a time to buy. I had been telling many of my friends, many people, even at that time when Tesla was trading at $100, $102. Remember, 52-week high of Tesla is $314.67, and 52-week low of Tesla is $101.81. So clearly Tesla is not a stock for weak-hearted. You need to be in the long-term race. You need to be a long-term player if you are handling companies like Tesla or Nvidia, by the way. Nvidia has nothing, the result has not come in, but Nvidia has dropped from 480 down to 440. And I won't be surprised if it goes and hits 420. I've not looked at the technical resistance of that, but the technical resistance of Tesla is around 260, and if it breaches 260, it may go down to 240 and then bounce back. Looks like it was pretty stable on Friday, so looks like it's kind of stabilizing there. And I won't be surprised if it starts its journey upwards from Monday on. Well, let's a little bit more evaluate why the market was unhappy. As I told you, number one was the auto gross margin was 18.2% versus what the market was expecting, 18.7%. Number two, Elon Musk did not change the outlook for the production. So right now they have announced the production will be something like 1.8 million vehicles for 2023, which is actually whopping 50% CAGR. Yes, guys, you have heard it right. 50% CAGR growth rate. And the market is unhappy about it. They were thinking that Tesla should increase its production. Well, a couple of reasons for that. But before I go to that, let me explain. Tesla right now enjoys 64% market share in North America, as I had covered in my previous videos. I'll put a link of that in the description. Please have a look at it. And with 50% CAGR, I think pretty much it's on that track. And the reason why they did not do that was basically there might be slight delay in the shipment because Tesla is refreshing its Model 3. And guys, when we are talking about these models, let me explain that as well, that the total vehicle production was 86% higher as compared to last year. I gave you the number, 479,700. And if you look at by the model, so Model S and X was a 19% growth year over year, and Model 3 and Y had 90% growth year over year. And don't forget, Cybertruck is going to hit the roads in December. A lot of people are skeptical about Cybertruck and the uptake of Cybertruck. But hey, based on the current demand as well as the pre-booking, looks like Cybertruck very soon, maybe in 2024, 2025, will be a 200 to 300,000 per year delivery vehicle. And as Elon Musk even mentioned in this earnings report, the Cybertruck looks different because it is different. And guys, let me tell you why it's different. It is the first truck of its kind, which is sub 16 feet. That means it will fit in your garage. It has 4 doors. And at the same time, it has 6+ feet of bed. So, in my opinion, actually it's from the technological and from the architectural perspective, it's actually a breakthrough. So a lot of people, even though some people don't like the shape of Cybertruck and they like Rivian truck much better, which I have got plenty of comments in my previous video, is Rivian the next Tesla? I would encourage you to have a look at that, where I have analyzed it. So despite all the different views of the users and the buyers, Cybertruck looks like it has a great demand out there. And what Elon also mentioned in that earnings report, when they were forecasting that earnings, that they are working on the battery, and they have kind of making the battery much more denser. They have got some success in that as well. Well, so that was the second reason. The Tesla did not increase the production for this year from 1.8 million to higher. Third, and the most important, was the market. The analysts were expecting that even though the margin is at 18.2%, they were expecting that Tesla should comment on that this is the bottom. And the question was asked as well, and I personally think that Tesla cannot forecast the gross margin, right? Who can forecast the gross margin in this world where the US is pretty much heading towards recession? Germany is already in recession. The whole world is going at something like 1 to 2% growth. So definitely this is, in my personal opinion, this is pretty much the bottom. Even in one quarter you can see plus minus 1% or so, but it's kind of a bottom. The reason is very simple, guys. The gross margin drastically and heavily depends on commodity prices, be it lithium for the batteries, be it aluminum, be it steel or other metals. And in this world right now, the metal prices are pretty much at the rock bottom. In the recessionary world, commodity prices are the one which are hit first. They are the rock bottom, and the gold goes up because people lose confidence in the rest of the instruments and they go and buy gold. So as the market will recover, the world will recover from this kind of recessionary trance, you will see the commodity prices might go up, and that will put a little bit more pressure on Tesla's gross margin. Having said that, as Tesla is on a journey of 50% CAGR in the delivery and production, they might have to cut the prices even further, and who knows, in the Cybertruck price point, Tesla might consider bringing the price point lower to boost the sale of Cybertruck. So I personally feel that it was a smart move not to comment that 18.2 is the rock bottom for gross margin. So these were the main ones where the market was really unhappy about it. And now let's look at that. What lies ahead? What's in the store, guys? Many of the analysts are quite bullish about it, and to name a few, Dan Ives has actually increased the price target to 350. So Dan Ives is from the Wedbush Securities, and he has increased the price target of Tesla to 350 for 1 year. Earlier his price target was 300. Gene Muster from Deepwater Assets, he has taken a 30 times earning, or 2025 earning rather, so 30x 2025 earning, and he has come out at a price target of 293. And ARK Investors, Tasha from ARK Investors, she's the analyst for Tesla, and if you look at Kathy Woods, their price target is, guys, their price target is $2,000 in 5-year time. Many of you who don't believe in an electric vehicle, or you don't believe in AI, or you don't believe in Tesla, must be laughing at it. But guess what? If you had one share of Tesla in 2020 before the two splits, now you will have 15. So the price you are seeing right now at 260, 270 is actually 15 times that price, guys, if you had been holding Tesla for last 3 years. And when Kathy Wood had at that time, something like 2019, 2020, had said before the split, she had said the price target is 2,000, 2,500. Many people had been laughing at her. Just like they're laughing right now that in 5 years' time Tesla will be 2,000. But guess what? It's already there. You just multiply 260, which was pretty much the closing price of Friday, by 15, and you get the number. Anyway, let's look at the other. Basically, if you really look at that Tesla, let's not forget it's actually an artificial intelligence and sustainability behemoth. Yes, you heard that right. Tesla is artificial intelligence and sustainability behemoth. If it's FSD, full self-driving technology, is just an AI, guys. What is AI? Artificial intelligence is basically getting machines to act like human. And that's what you're doing in the self-driving car. So FSD is a big golden goose for Tesla. And just now they actually announced that they have been talking to many OEMs to sell that license. Once it kind of gets matured, they are going to monetize it. Trust me. They even confirmed that, though they did not take the name, which is obvious. But they have started talking to some of the OEMs, EV OEMs, to license for the license of FSD, full self-driving technology. And actually, just to give you the number or to put the things in perspective, so far there has been 300 million cumulative miles on FSD. On a daily basis, it's around 2 million per day. So pretty much they are advancing in that state. And I'll come to a little bit later when I'll talk about Dojo, the training, the neural training supercomputer. I'll come to that after this. So as they will start monetizing FSD, just like this monetized charging stations this quarter. Yes, Q2 was the quarter of charging stations, guys. Tesla has monetized it, and guess what? Almost all the companies that I know which are into the EV have signed up for that. So General Motors, Ford, Rivian, Mercedes, Volvo, Nissan, all of them have actually signed up for what's called NACS, North America Charging Standard, which Tesla has developed almost a decade ago. And they're all going to share the charging station, almost 12,000 charging stations in USA. And that will give Tesla something $3 to $4 billion revenue. On top of that, battery is another one. Panasonic right now is their largest supplier for the batteries, but they're also working on these batteries, and and that could be another one. They'll be monetizing the batteries. And robo trucks, guys. Robo trucks is another one which will pretty much hit the market or the road in 2024-25. And guess what? ARK Investors, Tasha Kini and Kathy Wood, these guys are very bullish on this. They're very bullish on FSD as well as the robo taxi. And that's the reason why the price target for them is 2,000. And that's the bear case, guys. So coming back to the point, if you look at some of the parts, auto is one component for which the results you saw. The monetization of FSD, monetization of battery, monetization of charging stations, which come under services, by the way. And then robo-taxi, cyber truck. And then another one is basically as they are trying to do the neuro training supercomputers. Dojo, they have started their production. So if you add all of them in the sum of parts methodology, according to Dan Ives, the valuation comes, or the market cap comes at around $2 to $3 trillion. Yes, you heard that right. $2 to $3 trillion. Many of these analysts think that the market cap will be pretty much $1.5 to $2 trillion into 2024, by the end of 2024. I personally feel, based on my own little analysis, that you will see Tesla stock hitting 300 before the US Open, and that is 28th of August. In a month's time, you will see Tesla hitting 300. And if Nvidia's next quarterly result doesn't surprise the market, you will see Nvidia crossing 500. If Nvidia's result is kind of disappointing, then you'll see it tumbling and going down to below 300, of course. Not below 300, below 400. So, as I told you, some of these stocks are not for weak-hearted guys. If you are in Tesla, you're in Nvidia, you need to be a little bit strong-hearted. If you want to play the AI and you want to be a little bit more stable, I think Apple is a good stock for you. Having said that, all these are not my recommendations. Please consult your financial advisor before making any investment decisions. So if you really look at that from the autonomy of these vehicles heavily depend on 4 pillars. The first one is the massive real life database. So all these FSDs, full self-driving technology, and the vehicle autonomy that we are talking about depends on 4 pillars. Number 1, massive real life database. Number 2, training the neural networks. Number 3, vehicle hardware, and of course number 4 is vehicle software. And Tesla actually has taken a leap forward, a step forward, closer to that, where they have actually started the production. They call it cheapest and fastest production of all these training supercomputers called Dojo. Yes, Tesla is investing roughly $1 billion in the production of all these dojos, which are nothing but they're the neural training supercomputers. And I won't be surprised once it kind of gets into the stabilized state, they'll start monetizing that as well, guys. So, with all these analysis and all this data, I think Tesla is giving a great opportunity to buy at this price. Every time Tesla drops, and if you have money, go for it. That's my personal advice, and don't take that as my recommendation. It may be biased, I do hold Tesla. And as I told you earlier, please consult your financial advisor before making any financial or investment decisions. Synanomics is out there to create financial awareness so that you can analyze your own stocks, you analyze your own companies and make decisions and make money. Otherwise, you'll have to rely on these analysts who come in subway to give advice to billionaires who come on the Rolls Royce. Don't get into that, as Warren Buffett says. And that's what Synanomics is trying to do, to equip you so that you start analyzing your companies and make your informed decisions. Guys, nobody has made money on borrowed conviction. You need to have the right conviction, and to have the right conviction, you need to have the right knowledge, right data, and right analysis by yourself. With that, it's a goodbye from your friend Pankaj Sinha. I'll come back again with another interesting update for you. Till then, it's bye. Bye-bye.